let's keep it going with the agri sector then. And last month, India signed a historic trade deal with the UK. And one sector which is set to gain is the agriculture sector. From fruits and vegetables to cereals, pickles, spices, and ready to eat meals, Indian exporters will now face zero duties when selling to the UK. Currently, the UK imports nearly $811 million worth of agri products from India. But remember, here's a catch. Both countries are moving towards an agreement on sanitary and phytosanitary rules, meaning Indian exporters may now have to comply with stricter maximum residue limit norms. The big question now is, could those tighter norms offset the benefit of India-UK FTA for our agri exports? To unpack this, we are now joined by Mr. G Chandrasekhar, commodity expert. Mr. Chandrasekhar, thank you so much for taking your time out and joining us here on ET Now. First up, tell us what really are these rules and what does it mean for India's agri export market then?
Yes, under the WTO, agriculture commodity trade must conform to what is called SPS, sanitary and phytosanitary regulation, which is simply plant health. Okay, a phyto is plant health regulation. So when a country imports agriculture commodities, that is plant-based products, it must conform to certain basic minimum safety. Okay, sanitary standard is a safety standard. Therefore, it's called SPS. Now, these SPS regulations for every country focus on ensuring food safety as well as plant and animal health. Very important. This agriculture is not just plant, but it is also animal. Okay, animal food and plant food, etc. And therefore, it covers food, additives, contaminants, diseases, etc., etc. Now, SPS agreements allow governments to implement measures to protect human health, animal health, and plant life. This is the thought process behind it. But these measures, which countries can impose, must be scientifically justified and proven, and it must be non-discriminatory. And therefore, it must be data-driven and scientifically proven. That's the point. Now, these measures, what are these measures? These could include, for example, limits on pesticide residue, limits on toxins, like say aflatoxin. Aflatoxin is a fungal growth on corn, on cotton, on peanuts, etc. All those toxins. For example, fumigants. Methyl bromide is a fumigant which continues to be used in India, but banned in most parts of the world. And therefore, countries which import food from India would not buy methyl bromide fumigated foods, etc. And therefore, these are different kinds of restrictions which countries impose. Therefore, the point is, UK currently, although India and the UK have this FTA, UK is trying to align its food safety standards with the European Union. Remember, some time ago, we were on this show, we were discussing India-EU food safety standards and how EU is restricting or imposing severe restrictions on import from a food security perspective, etc. Therefore, UK wants to align its food safety standards with the European Union, and European Union has a much stricter SPS regulation than the UK. And therefore, UK is now trying to tighten its own regulation. And this can potentially affect Indian agriculture exports. And this is something I did raise this point on our show, if you recall. Therefore, Indian exporters have to exercise utmost caution while signing export contracts with the UK. And they have to be very clear about UK's food safety standards. They have to be clear about the import clearance norms, etc. Otherwise, our commodities, our goods can get stuck at the UK ports. And I would think, as a preventive step, what Indians should do, my strong sense is that Indian exporters can actually invite UK importers to come to India and inspect the cargo, sample, test in a laboratory and inspect, and then make sure that before the cargo is loaded onto the ship, that this cargo quality specifications meet UK standards. That way, it's called pre-shipment inspection. The importer can do pre-shipment inspection. This way, we can overcome that barrier and make sure that our goods don't get stuck. Our goods meet UK's norms, and then the exports take place smoothly. But I must mention at this point of time, there is no report of any consignment from India being held up in any of the UK ports. We haven't faced it yet, but we have to be careful.
Understood. I get that point. But Mr. Chandrasekhar, if you can tell us then how difficult will it be for Indian farmers to comply to these rules and regulations? And if at all it is expensive to actually do this, will it then negate the impact that we were penciling in earlier, that perhaps farm exports could rise by 15 to 20% because of this deal that has been signed between India and UK?
Exactly. In fact, I had mentioned earlier in our show also that this UK-India trade deal, at least insofar as agriculture, commodities and food exports are concerned, is not a game changer. And it is not going to be a cakewalk for India. UK is a small market in terms of population, but it's a high income market. And to that extent, we should be able to supply premium and high value added product. But their quality norms are quite stringent. Therefore, let us not get carried away. This trade deal is very good, but we need to put our house in order. We need to ensure that our pesticide residue limits, minimum residue limits, are within the norms specified by the UK. We need to improve our pre-harvest and post-harvest handling of our agriculture commodities and of our food crops, etc., whether it is rice, fruits and vegetables, or spices, or the processed foods, etc. We need to follow more scientific methods of pre-harvest and post-harvest practices. But that's not going to happen overnight. It's a process, which is where policy comes into play. The role of export houses would come into play.
Correct.
The role of farmer-producer organizations would come into play. It has to be a large national movement of completely elevating and enhancing our own internal food safety standards.
Correct.
And that will help us increase our export.
Understood. I completely get that point. Mr. Chandrasekhar, thank you so much for taking your time out and joining us here on ET Now and explaining what really these norms are and whether it will be feasible for Indian farmers to implement them. Thanks so much for joining us today.
God bless.
But shifting focus to our next segment, did you know? And we put the spotlight on hurricanes which can actually be traded. On the Chicago Mercantile Exchange, there is something called the Hurricane Index, which is designed to measure the potential damage from an Atlantic hurricane hitting the US. Much like the Hurricane Severity Index, it factors in both the size and the intensity of the storm. The CME Hurricane Index specifically uses two key inputs. One is the maximum sustained wind speed and the second is the radius to hurricane force winds. These numbers form the basis for hurricane futures and options, financial contracts that can be used by businesses, insurers, utility providers, and even homeowners to hedge against potential losses. So yes, on Wall Street, even the weather can be traded. Interesting, isn't it? That's all the time we have on this edition of Commodity Central, but Newsroom coming up on the other side.